All right, I know you've read the title. I know you've seen everything, and pretty much we blew majority of our funded accounts. And I'm not gonna blame it on the strategy. I'm not gonna blame it on ICT. I'm not gonna blame it on anything other than myself. I'm being completely honest. I got very impulsive and I got very undisciplined. You know, we were undisciplined. We were taking trades we didn't need to. We were taking trades we weren't supposed to take, and we were just forcing them. So it just really opened up my eyes whenever I blew these accounts. I was risking too much, and I was just letting the emotions get to me. I was not following my plans. I was not following my game plan, and I just felt like I had to rush the process and get there as fast as I could because we set a time limit basically. And that kind of forced me, I won't lie. Do I plan on reaching our objective? I don't plan on it, if I'm being completely honest. 1 million funding by the end of this year. It doesn't seem reasonable to me, if I'm being completely honest. And I don't know if I'm still aim for it, but my expectations are kind of reaching just for at least 5 figures to 6 figures in funding. I'm not gonna, try to force the 7 figures, but if we get there, then by all means, it wasn't intended to get there, if I'm being completely honest. But we blew the 5K, MT4, MT5, MT4 again. So we have 0 funding on October for right now, basically start of the month, and then risking 1% only. Main reason why is because whenever I would risk 2% and we lost that trade, I would want to enter again, and then it was just a cycle repeating that we were risking too much. We were being more of a discretionary trader. Basically, we were using like every single model, every single strategy we could, and we were just using all the concepts, blending them in together. And of course, at times that would work, but it'll be very inconsistent. So I decided to make a mechanical strategy for just entries in general, basically the OTE model. So I would look for a market structure shift and then the retracement, or sometimes, of course, a turtle soup would be nice, but we have to be more cautious whenever we enter those type of trades, because you can't define the risk for ahead of time, because you don't know if the turtle soup is going to occur, or you don't know how far it's going to go beneath that lower high. So that's kind of why I am more cautious about that one. But again, the OTE, we can predefine the risk. We can put it in the lot size calculator before it reaches that retracement level. Eventually, I do plan on adding more, but as of right now, that I found the best win rate using OTE for the entries. Risking 1%, waiting for a 1 to 2. Basically, I've uploaded it on the other channel, the group entity. You can go check that out. Basically, the trading strategy I'm going to be using. Yeah, I'll leave that video in the description below. But again, down the risk Monday and Friday. Monday and Fridays, Friday's a TGIF strategy. Monday, we tend to let the range pan out. So that's kind of why I down the risk. Of course, if Friday's offering a good TGIF, I'll kind of risk a little bit more than 0.5, and I'll go to 1% like regular. Hold positions if we are following higher time from order flow. So if we are following a higher time from order flow objective, of course I'm not gonna try to trim most of the position off. I'm gonna try to leave some runners in there, trade on both till we're funded. So I have another 10k account that is for MT4. We are on P1. So that is pretty much it for right now. And then we have other 5k accounts I bought pretty much, but the majority of them I'm only focusing on the 10k and then the 15k. We're still on P1 for both of them, and 1 to 2 minimum. Stop loss placement is something I'm working on. Lower time frame plus higher time frame order flow. So the entry is basically majority of the time where I'll make my mistake is during the lower time frame entry. I would enter, and then again the stop loss placement wouldn't be the best, or I wouldn't enter at the best area, and my stop loss would be way too tight, and I'd be offside basically. I'll be on the wrong side of the market on the lower time frame, but on the higher time frame we're following the objective and the order flow, but we just get caught offside on the lower time frame basically. That's something I have been trying to work on. I've been tape reading. I've been putting any trades. I've just been reading the market and just anticipating what is going to happen next, seeing what levels pan out and how they pan out and where the drawn liquidity was, and that's pretty much it. So we can see pretty much we hit our previous daily drawdown. It wasn't even the max drawdown for both of the accounts. It was a previous daily drawdown. This is kind of what I mean, risking 2% and having a max loss of 2. This is basically the downside, and I kind of realized that after we blew the account. Just risking 2% and then eventually losing twice in a day, it made me mentally go a little bit insane, I won't lie. And then eventually we went on the other account and we did the same thing. So that's something that I realized, and just reflecting upon that, I was like, whoa, we can't risk 2%, bro. This is not really gambling at this point. And just putting all our risk on the table and having high expectations for the trade, just really, and eventually just started reviewing and just building our way back up. And of course it was the daily loss limit. We blew that and even more, I bet. You can see it was on the 27th. SPX, a bad trade, minus 60. SPX again, 27th, and then GBP USD, 2 lots. Basically, yeah, just basically 4 lots in general that just blew us. The 2 SPX lots, and then eventually, I guess it was a pyramid entry on SPX, and then we lost, and then eventually the GBP USD. I would show you the charts and like the trades, but I don't know, I just don't feel like going over it right now. It's too much. It's too many, bro. It's too many that I've lost, and I'm gonna confuse them for which account and all that. I don't feel like doing all that work yet. Again, same thing for the other MT4 account. This one does look a little different. Blew it in 1 day. Fully transparent, guys. This is what happened. And of course, lower time frame entries being offside and just not being able to accept the risk. Some trades, I wouldn't be able to accept the risk. I'll be moving my stop loss to break even, or taking, cutting half of the position off at break even, and then eventually and then cutting more off, like 25% more, and then eventually leaving 25%, and then eventually the win, it's a winner. And it's eventually just not accepting the risk, not thinking in probabilities. And I've been documenting it, and I'm gonna do a documentation basically for this month. So that's kind of why I've been not posting too. I've been documenting my day-to-day life basically. And it was an NQ trade, and then eventually it was a bad trades, I guess, from the previous day too. It just blew the momentum, I guess. Yeah. So the previous day we lost again, just like around close to 2%, and then eventually we just started just trying to make it back up, and then eventually the next day. All right, so this is my current 15K account that I have right now with FundedX, and I do plan on passing this one, but I am being a little bit more conservative, and I'm only risking 1% again, and I am entering off of the mechanical strategy. That's why I haven't been trading. I've been building that discipline and not feeling the urge to trade. That is pretty much it. You can see we have been fixing our RR and basically just holding the trade and letting it run to our final terminus, and just overall just fixing our psychology and just our entries, I guess. Strategy, I would say, the probabilities play out. Risking 1%, we can lose 2 trades and eventually make it back up in 1. That's kind of how it happened here. We're still, close a little bit. If I would have took a full terminus below a low, eventually, it retraced a little bit, and I took my majority of the position off, and that's kind of what happened here. That's kind of why we didn't eventually hit that 2% mark. But if we did, then it would have. I am trying to conserve it because it is a bigger account, and the reward would be a little bit bigger. So yeah, and I don't have them on a trade copier either. All right, so this is the Blue Guardian 10K account that I have, and I am close near to 4% of drawdown. So the first trade I can explain, again, it really was taking profit at break even because the trade idea to me didn't look so well. We didn't stick to our strategy and eventually became a winner, and we got stopped at a break even. That's kind of why you see a little bit, and eventually we would have hit a 1 to 2, and that would have been basically just 1% of drawdown in this account. But again, that's something I have to fix if I'm being completely honest. And then eventually we took a 1% loss, and then eventually we took a 2% loss on 2 trades, and then that's pretty much it. We are having better risk management if I'm being completely honest, and it's been that's something I have to improve on, is risk management and psychology. Those are the 2 most important things. You can have all the analytical data or all the concepts down and not be a good trader. Being a good analyst versus being a good trader, 2 different things. You can analyze the market in real time, but if you aren't able to have good risk management and able to hold that trade to your terminus, or taking a good amount of partials at certain areas, then of course you're not going to have a good RR or a good profit factor. It's going to really just be detrimental, and then eventually the losses are going to eat you up if you don't control the risk. So that is something I am trying to work on these bigger accounts, and I am getting better day by day, and that's something I am just viewing and just analyzing every day, just seeing what improvements I can make in my trading. As you can see, we have the indices up here. We have SPX and Q. These are the only 2 indices I'll be trading. US30 is more for correlation, but if I do find a good trade idea on US30, then eventually I'll add the market and then take it on the MetaTrader accounts. Then we have Dixie for correlation, Euro USD, GPB USD, AUD USD, USD CAD, and JPY GJ. So that is pretty much all the markets. These are the only markets I'm really viewing on a day-to-day basis, and I'm pretty much just analyzing. I did take off a bunch of time frames. I won't lie. I was using the 2-hour and then the 30-minute. I was using a bunch of time frames that I wasn't really, using. In my opinion, I started just cutting down and focusing on the quality of the time frames. Of course, ICT did play a factor in this because his market reviews and like the way he would review the market, like his just the videos I would see, and I was reviewing the notes, and I was like, all right, what time frames does he use? Just majority of the time frames he uses is pretty much these. I was like, you know what? Might as well use these. The only indicator I have is power 3 on this chart for the monthly candle, so I'm pretty much watching how the monthly candle forms, power 3, with the weekly chart, power 3. So, and then on this one, if you drop below the 1 hour and you zoom into the 15-minute, I'm watching power 3 on the daily with midnight opening, the opening price. So anything below that would be a Judah swing. That's kind of what happened here today. Improving in every aspect I'm trying to, and just reviewing every day. Once again, I did say I am documenting, so I am documenting for the whole month. I am documenting a lot more, and I am doing other things other than trading. I am focusing on other businesses, and I'm starting up other things like business wise, of course. So I won't be able to fully dedicate my time into this channel, but eventually I will, after we get those things sorted out. It's usually just the beginning. That's the rough part, but after you get it flowing, then eventually you start seeing a lot more time open up. So that's kind of what I'm doing right now. I'm just focusing on a lot of different things, and of course trading too. I am putting a lot of time and effort into that, and I do feel like the pressure is on whenever you're like posting on a day-to-day basis, updating people what you're doing, because I feel like you just have to you have to be there and you have to execute. You have to perform, you have to put a performance on. And that's something, that ICT talks about. And I put that into consideration, putting this out on the internet, it puts a lot of stress on you. And it just feels like you have to perform. You have to impress people. You have to seek their validation. And it isn't something that I've always wanted to do. And this channel was mainly just for documenting my journey. And, I kind of swifted my way and my, thought process of the channel. I was making videos for views, and the genuine ones were eventually, the ones that were popular and popping off. It was challenge videos that I like making, but some of them would be for views and this and that, and I really just got off track, and I was being sidetracked. So that's kind of something I'm just trying to dimmer down, basically. All right, guys, so I'm going to show you the euro trade that we took basically on the 15k account, and then I'm going to show you the trades for the 10k account, and then that's pretty much it for the video. So eventually you can see your euro here. We had a trade before the winning trade, and that's kind of why we weren't up around we were supposed to be up 1%, but this trade kind of put us down at break even, near break even, I should say. So you can see we hit a -1R. Basically, we got stopped out because of a rejection block, and this is pretty much the strategy. If you want to get more into it, basically go check out the video in the description. I'll leave that there. At times, I told you can use the wicks or you can use the bodies of the candles, but again, if it's like a lower time frame, like the 15-minute, you can use the wicks. If you're on a 15-minute, if you're on a 5-minute time frame, you can use the wicks, but if you're on like a 15-minute time frame, you can use the bodies. It just really depends on what time frame you're on. You can use the 1 minute. Sometimes this works on the 1 minute, but you have to have confirmation, which is a market structure shift or a break in market structure. So again, rejection block, time aspect again was around lunchtime. It's about to hit lunchtime, so you can anticipate a reversal during lunch. So that's kind of what we got a re-entry basically for 2R, I believe. Yeah, 1.5R. We risked 0.8, I think, or around there, and eventually we hit a 1 to 2. This was a 1 to 2, and eventually the trade hit even further terminus, but I started cutting mostly around here. You can just see with the wicks, pretty much had offered a better stop loss. We did wick into that rejection block, and that's kind of where we got stopped out. So if we would have had our stop loss right here and we never basically took that loss, it would have been up 2%, or 1% on the account. And this again was the MT4 account. Basically, when we started trading an MT4 account, 0R break-even trade. So you can see here it was a USD CAD trade, and USD CAD is kind of known for this type of movement where it creates big wicks like this. It just creates a bunch of wicks. That's kind of the issue for me. That's kind of what the issue was for me. I wasn't able to accept the risk, even though we were having good risk management. Even though we risked 1%, it was still it wasn't enough confluence for me to hold the trade. So I moved it to break even, and then eventually we got stopped at a break even right here. So we entered at this big wick, and I wasn't fully comfortable with this. And eventually, we got a 1 to 2 that it ran and hit. It was, of course, you can see the dates. You can go back in your charts and you can see this using a cap, of course. So, and this is where we started to lose on MT4. We lost 1%. Again, I'm having really good risk management recently, and I am kind of good that we're improving in risk management. So again, 5-minute time frame, OTE entry. You can see we used the wicks. And eventually this day, we did get stopped out again. Main reason why was because this wasn't a valid market structure shift, in my opinion. It was really just, a breaker being formed on the lower time frame, on the 15-minute time frame was a breaker, I believe. And, we just kind of, we got caught up in that. And order flow was bearish, of course. We weren't able to anticipate that. I do believe this was in inverse that became an inverse, obviously that became an inverse. So we weren't able to fully just anticipate the multi time frame analyzing real time. So that's kind of why I have been tape reading, just trying to find where the drawn liquidity is on, different time frames and just anticipating that, So SPX, again, it was the same trade. Basically, it was an SMT divergence here, and NQ took out the low, basically a turtle soup, and I believe SPX was a stronger one. So I kind of anticipated SPX to rally up. Even though NQ took the low, I thought we were just going to rally on NQ and SPX because SPX was hitting a buy side imbalance on the weekly time frame, on the daily time frame, and eventually we have that volume imbalance too. That's kind of where my confluences were, but eventually you can see here we stopped out before we made the real move. So fake market structure shift lower, and the volume was dying down there in the PM session, so we should have been cautious of that. And again, it's just simple mistakes being made here, but again, the risk management is where we are improving on. So, and then here was the -0.5R and then the 25R. Again, this is where I started to become the discretionary trader, basically using the 22 model or other concepts, and I wasn't sticking to the mechanical strategy. That's kind of where we down the risk too. I noticed that again, a tight stop loss, 1 minute buy side. It's really just lower time from entry, stop loss placement, like I was talking about earlier. We got caught up on the 5-minute and the 1 minute, and then eventually we thought this sell side imbalance on the 5-minute was going to hold, and we saw rejection, and that's kind of where I entered. But again, we didn't have enough confirmation for lower prices. Just 15-minute inversion for value gap and 5-minute dealing range, high time for SIBI. As long as we follow the good risk management, that's all that matters to me. Let's go back to this trade here and let's show you pretty much. So you can see here again, it was just a bad trade idea. I will admit that. and we weren't able to anticipate the higher prices yet because I was just so focused on what was the 5-minute time frame telling me. This is why you gotta be transparent. I was on the 5-minute, stuck on the 5-minute, and that's kind of why I've been tape reading. Not taking any trades, but trying to find why price is doing what it's doing and just seeing where the next draw liquidity is. I have been improving a lot, tape reading, and of course doing other things other than tape reading, like back testing, reviewing the trades. And I am planning on doing better reviews. In my opinion, I plan on doing like video reviews, seeing what I did wrong, what I did right, and then just watch those videos over and over. And then of course my charting, basically seeing what the week has done, sugarcoating myself, saying that I anticipated this, I expected price to do this, and we have been doing that, and price has been doing what we anticipated and what we expected in our journal. And I review that every day. I'm just getting better at reading price every day, man. It's just having good risk management is of course another good thing that you should have and you should improve on every day. So that's kind of why I kind of stick to this mechanical strategy. It lets me have room for error, basically, and have good risk management. So again, here we on the 5-minute time frame. You can see price was ranging back and forth, and eventually we broke out of this range right here. And you can see we're building up that low resistance liquidity, and these were two average draws on liquidity. Pretty much we ran through both of them, and then eventually you can see we created these relative equal highs. But even before that, Tuesday we were having that reversal, the market maker buy model, and then eventually Wednesday was pretty much a continuation day from that reversal. And then eventually you can see NFP Friday was coming in through. So Thursday wasn't really too much of a range defined day. You can see it was pretty much shopping. But again, we're just going to go back to the trade. You can just see pretty much the PD arrays, understanding when you're offside. ICT talked about this. So here, we should have never seen this fair value gap get disrespected. That should have been my first confluence, or this order block, because it was in a premium, basically. So when you're in a premium rates should be respected, and we should have dropped there. That should have been another confluence, or even this the premium wick of this. As soon as we see that get respected or close above, and then eventually we disrespect it, and eventually we come back, we disrespect it, and then we rally higher. That should have been enough confirmation there to not even enter the trade. But again, my baby mindset the past 2 days I have been updated. I guess the program software inside of me has been updated, and I wasn't able to anticipate this real time. So but again, it just having good risk management at the end of the day, and then seeking improvement is another thing. That is pretty much it. I'll just tell you straight up, that's what happened here. And these up close candles should have never been disrespected. The mean threshold of that should have never been disrespected. We were offside, and I didn't even notice until it was too late. But of course we are going to fix these mistakes, and I'm just going to seek improvement every day, guys. So that's pretty much it for the video, the most recent trade. So yeah, hopefully you guys are enjoying this series. I'm going to document it, and I'm going to display to you how I basically became funded, because I do believe we are going to get funded real soon. So until then, I'll update y'all. Peace.